to ICICIdirect. We are in an exclusive conversation with Arun Sundaresan, who's a co-fund manager, Quant Fund and Head Product Management Group at Nippon Life India Asset Management Limited. Well, he is joining us to talk to us about Nippon India Taiwan Equity Fund, the NFO of which opens on the 22nd of November and closes in on the 6th of December. Right, that's awesome. Thanks a ton, Arun, for joining us today on the show. That's a wrap. That's everything that you need to know about the Nippon India Taiwan Equity Fund. Remember, the NFO opens on the 22nd of November and closes on the 6th of December.
Thank you, Samina, for hosting me on the show, and a very warm welcome to all the viewers. So I'm here to present an overview and this new fund offering Taiwan Equity Fund, which is first of its kind, the only Taiwan-focused fund coming out at this point in time. So let me begin by giving an overview, as Samina mentioned, about Taiwan. So Taiwan is actually a very small country when compared to India. Its GDP is about $750 billion, which is roughly about one-fourth that of India. Export-oriented economy, nearly 55% of GDP comes from export. They do export to all the major economies of the world, be it China, US, ASEAN, Europe, and Japan. And because they are largely export-oriented, they run a current account surplus of nearly $50 billion every year, which also has resulted in their currency, having an appreciating bias. So the new Taiwan dollar, their currency has appreciated nearly by about 50% in the last 10 years when compared to the Indian rupee. The main stock exchange, the Taiwan Stock Exchange, has a market cap of about $1.8 trillion. That's a little more than half as much as India. They have nearly 9 Fortune 500 companies. To give you a context, India has 7. And some of these large companies, for example, this company called as Anhui Precision Industry, what we know by the name of Foxconn, does a lot of outsourcing manufacturing work for large mobile phone companies, laptops, etc. Their revenues for it's almost 2.5 times than the largest company in India. Similarly, there are companies like Pegatron Electronics, Quanta Electronics, who do similar outsourcing work for major brands like be it HP, Dell of the US, Lenovo of China, or the Japanese brands, very large. TSMC, the Taiwan Semiconductor Manufacturing Company. This is a flagship company of Taiwan, which is into semiconductor manufacturing, or chips as they called. This company, again, is very, very large, nearly $550 billion of market cap. And then there are a few financial companies as well. Cathay Financial Holding and Cubon Financial Holding, which are financial conglomerates based out of Taiwan. So the main industries of Taiwan are semiconductor or chips as they are called, and electronics manufacturing. They account for nearly 70-75% of the entire economic activity and market components. So all related areas of semiconductor manufacturing and electronics manufacturing is what Taiwan kind of absolutely dominates. And in terms of GDP growth profile and inflation, etc., Taiwan tends to have more like, I would say, in between a developed market and an emerging market kind of a profile. The GDP growth in 2021, as per IMF estimate, was about 5.9%, inflation about 1.5%. So even though Taiwan is an emerging market technically, the growth profile is somewhere in between a developed market and a developing market, possibly to do with the fact that they largely serve the entire world, particularly the developed markets like US, Europe, Japan, and of course, China. So in terms of their weightage in the MSCI Emerging Market Index, they command the second highest weight after China. China commands about 34% weight. Taiwan is about 14.7%. This weight is actually higher than both South Korea and India. India has about 12% weight in MSCI Emerging Market weight, possibly because of higher free float market cap that Taiwan enjoys. So as far as the market composition is concerned, information technology accounts for nearly 56%. Information technology is not the IT that we know in India, which is more of an outsourcing work. Here we are talking about tech manufacturing. Apart from that, the electronics components, whether it is under industrials or consumer discretionary, some bit of communication services, etc., which I mentioned here. So that's the electronics manufacturing side. So together, these two account for a good 70-75% of even the market, which is reflective of economic activity. So that, in essence, is the summary of what Taiwan is all about as an economy, as from a market perspective.
Right. Arun, you mentioned about Taiwan's main industry being semiconductor and electronics. How big are these industries and what is Taiwan's position in them?
Yeah, Samina, so the moment I mentioned semiconductor and electronics, it might give an impression that we're looking at something very, very niche here. But I must mention that the semiconductors are actually the backbone or the brains of modern electronics. So today, we're living in the information age where there is requirement for large data, huge high-speed processing of this data, etc. The chips are the backbone, which is actually driving this transformation. And this is actually enabling a whole lot of end use. So all forms of wireless communication, mobile phones, GPS receivers, your Bluetooth technology, Wi-Fi technology, remote controls, all of them use chips extensively. Apart from that, personal computers, servers, all processing units. Then in industries, especially in manufacturing, which uses high-end technologies, precision manufacturing, it finds a lot of usage. Automobiles typically account for 12 to 15% of all chips that are being manufactured. And of course, servers and whole lot of wired communication use, chips extensively. So therefore, in terms of end use, we are looking at a very, very wide usage. And in fact, directly or indirectly, in the recent chip shortage that we saw, nearly 169 industries got impacted. So that shows the extent of the chip usage and the impact it could have across different industries. So right now, the chip industry is estimated. I'm talking about the production value of chips 2021. It will be roughly about $525 billion, which could translate to roughly close to about 40 lakh crores. So that's the size of the chip industry that we are talking about. Taiwan actually dominates this space. Taiwan itself accounts for nearly one-fourth, nearly 25% of this chip value, nearly about $130, $140 billion. This usage of this chip has got pronounced off late, of course, with recent developments like after the onset of COVID, the work from home environment, which has resulted in a lot of individuals and companies having multiple devices and all the technologies related to work from home, having come into prominence. And of course, the technology itself has been advancing. If you take a mobile phone, for example, till about a decade back, hardly anything. Today, we're already talking about 4G, 5G, and going forward, even more advanced technologies. So these things are likely to, kind of pick up pace as we go further. The recent US-China trade war, and particularly the technology war, what had happened in the case of US doing to a particular company in China, etc. All these things have also led to a phenomena where increasingly the dependence on Taiwan for these economies, these countries have actually become even larger than the recent past. So Taiwan, as far as their exports are concerned, this is the first half of 2021. China is a large trading partner. In fact, first half, Taiwan exported nearly $89 billion to China. Apart from China, the other major economies have been ASEAN, US, Europe, and Japan. So here we are looking at a country which is having a global play. So rather than look at Taiwan as one country, this is an export market which is catering to the entire world, right from China to all the developed markets like US, Europe, Japan. And as I mentioned, the end use of the chips is actually widespread, whether it is the work from home environment, high processing computing, streaming, 5G, and going forward, advanced technologies. Like, for example, the Internet of Things, which is going to be a phenomenon itself, home automation, industrial IoT, Internet of Medical Things, Internet of, you know, it's used in oceanography, in military. Whole lot of things are going to use a lot more of chips. Technologies like electric vehicles and autonomic driving. If today automobiles use some bit of chips, that is likely to go up by 4 times, 5 times with the onset of EVs and autonomous cars, which are not too far ahead. Maybe 3 or 4 years down the line, they will become mainstream. The new age technologies, anything that involves AI, supercomputing, telecom applications, all of them use chips very, very extensively. Taiwan has a very, very unique positioning here. It has a very well established semiconductor supply chain. As you can see in this particular chart, it's a very, very important chart. Semiconductor manufacturing involves 3 stages. One is design, second is manufacturing, which is split into two parts. The one front-end fabrication, and the second the back-end assembly and testing. Taiwan literally dominates the manufacturing part, both the fabrication part and the assembly and testing part. They do some bit of design, but not so much as they dominate in the manufacturing part. So what you can see in the chart is that IC fabrication, for example, a $52 billion industry. Taiwan has a 70% plus market share. IC testing and packaging, which is an $18 billion industry. Taiwan's got nearly 50% market share. Even in design, which is a $28 billion industry, Taiwan is not too far behind. It's nearly about 20% market share. So they dominate the entire supply of the value chain, right from design to manufacturing to assembly and testing and packaging. They are also fairly good in some of the other electronics related activities, like the TV panels, like LCD panels, LED panels. They again play a very, very dominant role. And in some of the other high-end areas like printed circuit boards, electric scooters, and high-end bicycles, again, Taiwan has a fairly reasonable play. To sum up, semiconductors and electronics, which are kind of ubiquitous now, very large, and going forward likely to have high growth areas. Taiwan plays already a very, very significant role, and we expect that to play a leading role as we go forward as well.
Right. Arun, how is Taiwan market placed in terms of its earnings and valuations?
Sure, Samina. So just like how it is the case with most of the global economies, after the onset of COVID, where earnings got impacted, from those very, very low levels, we've seen a very huge uptick as far as corporate earnings profits are concerned. So this year, for the second quarter of 2021, the Taiwanese corporate profits actually grew by 92.5% when compared to the previous year around the same time. But this is more an exception. We know that this is because of the base effect. But because of this, what has happened is that the valuation levels, the P levels, so what's shown in the chart here, the right chart is actually the 1 year forward P has actually come down to 13. And that number is actually lower than their own historic average number of something like 15. And this number, when compared to India 1 year forward P could be right now somewhere around 19. And this number is also more to do with the nature of Taiwanese industries, which is largely a brick and mortar manufacturing industry, which is why the P in relative terms is lower when compared to India. So here we are actually looking at an industry which has been around for 50, 60 years. It's not, although the technology is new age and it keeps emerging, the size is large, the opportunity for growth is huge. Net, we're talking about a manufacturing industry, and therefore, it commands a P in line with that. So this is not like a new emerging technology like a EV or a crypto, which could be largely based on hopes. Here we're looking at very, very tangible things, which is why you're looking at PE levels like 13. To sum up, valuations are very reasonable given where things are and given the growth potential. Valuations, I would suppose, are fairly reasonable. Of course, the global growth perspective, obviously, in the recent past, the balance sheet expansions, the liquidity infusions across the world have been very, very large. This is important, keeping in mind that Taiwan, in essence, is serving the global growth.
Right.
So this is expected to be reasonably strong, although tapering has started at some point in time, interest rates will be increased, etc. As of things stand today, this part of the global economy looks reasonably strong, and that should bode well as far as Taiwan is concerned.
Right.
So from an earnings perspective, the potential earnings perspective, as well as from a valuation perspective, I would say that Taiwan is reasonably well placed.
Right. Arun, can you tell us a little bit more about the fund strategy?
Sure. So I mentioned about this, financial company called as Cathay Financial Holding, which is, a Fortune 500 company. So what we have done is we have tied up with the asset management company of Cathay Financial Holding, which is a Cathay site. They are the number one, they're the largest asset management company in Taiwan. So we've tied up with them for an advisory mandate. The Cathay group itself manages assets of $200 billion across the world. And they have presence apart from Taiwan in other countries as well through their subsidiaries and investments. And they have interest in related fields. Cathay site itself manages about nearly about $42 billion. That's nearly about 3 lakh crores with interest in mutual funds, managed accounts, within mutual funds and equities, fixed income, active, passive, etc. And they have a fairly large and experienced team, nearly 137 investment professionals and fairly large investment experience. So what we are doing right now is that we have looked at some of their strategies, and we have chosen one of their strategies called as Cathay Fund. And we are going to base our investment on this particular fund. So this is not a fund of fund. We are going to invest directly into stocks listed in the Taiwan Stock Exchange, but our investments are going to be based on the portfolio of this particular fund. So this particular fund has a track record from 2000, so more than 21 years, and it's done reasonably well. So we are going to be, in a way, be replicating the portfolio of this particular fund.
Right.
So this fund will invest bottom up. It will be a long only fund having about 35 to 40 holdings, reasonably high conviction, fairly diversified. Of course, that they follows ESG integration as well, which will reflect in the portfolio. The fund actually looks for 3 M's when identifying stocks. The company should have a dominant market share, which should come from successful business model. They should be serving sizable large markets, they're having mass demand, which is what global markets are all about. And of course, the usage of chips itself. And companies which have a high margin, which comes from a high entry barrier because of superior technology, which most of the Taiwanese companies boast of, which they've built over a period of time. So that's broadly how the approach would be done.
Right.
No single stock exposure will be more than 10%. And of course, I know the portfolio will be a mix of predominantly growth with some bit of value, and the fund will follow a multi-cap investment strategy.
Right. Arun, very lastly, to sum up, what are the opportunities and risks that investors need to keep in mind while investing in Taiwan through this fund?
Yeah. So from a investment opportunity perspective, while it gives an impression that we are looking at a very specific country here, the economy is all about exporting to the entire world, and that is very, very diversified, as I pointed out. So it's actually a global play, particularly on semiconductors and electronics. But there again, I pointed out that the end use is very, very widespread. So right from your consumer durables, whether it's an air conditioner, a washing machine, to computing applications, to today, if you talk about companies like Google, they're largely about data processing. All of these companies use chips extensively. So to that extent, we're looking at a very, very wide end use, and therefore it's a very diversified global play. Tech manufacturing is as such a very large area. I talked about the size, and it's a fast growing area. The new age technologies, if at all, is going to accelerate this. Taiwan plays a very critical role in the entire supply chain. They are present across the value chain. And for Indian investors specifically, this is an opportunity to add a unique, I wouldn't call semiconductor electronic as a sector. Maybe it's more a theme, but there is something unique because we do not have presence in this field. In chips manufacturing, for example, we have absolutely no presence. Maybe in some bit in electronics manufacturing, but very, very limited. So therefore, it presents a very good opportunity to add a unique theme from a diversification perspective. As far as risks are concerned, one of the prominent risks is, and this is very, very contextual, the geopolitical tensions that are going on between China and Taiwan. So what we understand from our reading and interactions is that, one, this has been going on for a very, very long time. This is nothing new, nothing very different which has happened in the recent past. And given the economic and geographic significance of Taiwan, it's very unlikely that any kind of confrontational approach will be taken. What prevails in Taiwan is best described as one of strategic ambiguity. That while different rhetorics keep happening, there is a bit of ambiguity there, and so this may be a theoretical risk, but practically this may not pan out. Right. The other risk from a very long-term perspective is that a lot of countries are now realizing that they need to reduce, or rather, they need to increase their own, presence in the chip industry. So therefore, there are significant commitments to increasing chip manufacturing in their own geographies. So US has passed a CHIPS Act, which talks about $50 billion of incentives towards chip manufacturing. Similarly, is the case with China, South Korea, Japan, Europe. All these countries are now realizing that supply has been awfully behind demand. Therefore, they are trying to ramp up, shore up their chip manufacturing. Of course, given that Taiwan has a big leading advantage, they are relying on Taiwan and taking their help to actually put up plants in their own geographies. So in the very long term, supply is likely to increase, but our sense is probably it will increase possibly only to keep pace with the demand. So that's I wouldn't call it a risk, but from the current scenario going forward, the supply is likely to increase from a chip manufacturing perspective. And specifically coming to the portfolio, our portfolio is going to be diversified when compared to the index. When compared to the Taiwan index, particular stocks have a very high weight. Some stocks have as high as 30% weight. We're not going to invest as much into a particular stock. It's going to be diversified. Therefore, the fund performance and the Taiwan index return could be different from time to time. It could be higher or lower from time to time. Our endeavor here is to give diversified Taiwanese exposure and not really Taiwanese index, which is very, very concentrated. So that, from a portfolio perspective, I would call would be a kind of a risk or a difference that we need to keep in mind.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.